Hi, everybody. It's Ian Beamer with Guaranteed Rate, coming at you with the latest market update, November 10th, 2021. And so the Fed came out last Wednesday and announced that they would leave interest rates unchanged, which is great news. They also announced, no surprise, that they would begin tapering the purchase of mortgage-backed securities and U.S. Treasury bonds starting in November. That's this month. So they're going to begin tapering at $15 billion per month. That's $10 billion that they're cutting back on U.S. Treasury bonds and $5 billion per month in mortgage-backed securities, which obviously is going to play a role, but $5 billion in mortgage-backed securities represents about the production of about 1 day of current origination. So probably not the end of the world in itself, but certainly may factor into rates as we move forward. Generally speaking, if interest rates do start to tick upwards, we do expect production to pull back a little bit. Obviously, less people will be refinancing. So as originations will no doubt drop due to the falling number of refinances, that Fed tapering may play less of a role in actual interest rates. So supply will be reduced as demand gets reduced. So hopefully that doesn't impact us too badly. So Friday, we got employment numbers. Overall, a good report. Unemployment is down to 4.6% from 4.8% last month. Good sign. Economy's recovering. All good news. Today, Wednesday, November 10th, we got more news as the markets showed record inflation. So inflation levels higher than they've been in 30 years. The Dow fell about 240 points. Investors pulled out of investors pulled out of treasury bonds, which increased the yield on treasury bonds. Typically, is demand for treasury bonds is reduced, or people sell treasury bonds. The interest rate or yield on those treasury bonds has to increase to try and bring that demand back. So that's kind of what governs interest rates. That's how markets work. So mortgage-backed securities also increased by about 14 basis points on the day. So pretty big swing. So we talked about the fact that properties continue to appreciate. That is forecasted to continue. We're looking at average appreciation nationwide for 2022 to be about 5.1%, about 5% for the year. So if we have interest rates rising, that's going to change your purchasing power by about 13.6%. So $500,000 purchase today. We opened the day today. Obviously, rates change throughout the day, but we opened the day today at about 2.875 on a 30-year fix for a well-qualified borrower. On that $500,000 purchase with 20% down, $400,000 loan amount, that monthly payment would be about $1660 a month. So that same purchase of that same property, give it 12 months from now, if we're forecasting 5% appreciation, that $500,000 purchase price becomes $525, and that as rates climb, that 2.875 purchase price, 2.875 interest rate is forecasted to be about 3.5% come fourth quarter of 2022. So that payment on that same house, and this is still 20% down, goes up to $1,886. So that's a $226 increase, or about 13.6% increase in payment on the same house 12 months apart. That's the forecast. Just letting you know. One other thing to note is as we do see inflationary pressures influence the markets, interest rates, a lot of people for the last 3 or 4 years, especially in the conforming markets, they have not really been paying attention to ARM products. 30-year fix has been really aggressive, really low. There hasn't been a huge difference between the rates in 30-year fixed products and ARM products. We expect that to change in an inflationary market. That spread will be more significant. So be on the lookout for 2022. We do expect more ARM products. So just pay attention. If you're talking to a mortgage professional, make sure that he or she is well versed and can educate you in the pros and cons, what to be aware of, and something you might think about when you're making your next purchase or your refinance. How long you plan on holding on to that property. So we can just factor that into the right product for you. So anyway, Ian Beamer, guaranteed rate. Hope you're all doing well. Take care. Appreciate you checking out my video. Please click like, make a comment below. Any comments you can make, I'd greatly appreciate. Take care. Bye-bye.